Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and we're going to get started with our morning analysis. So what we do around here, for those of you that do not know, we grab this is our bias chart. We call it a T chart. It's just something I've done my 20 some odd years of trading. I've always developed a T chart. It's basically, hey, if the market goes up, I'm going to buy this. If the market goes down, I'm going to buy this. And if I do buy this or buy that, or I short this or short that, where's the big support and resistance levels that I need to be aware of? It's it's really just my daily preparation in trading. We do this every single morning with all the majors. So, well, not every single morning. Every morning the market's open. Minus the days that I'm on vacation or or which doesn't really result to a whole lot. But anyway, this is just the process we go through. It's the same charts, same analysis, same boring old stuff. I know a lot of you guys like to use all this fancy dancy crap, but I'll tell you what, in my experience over the years, and anybody who comes to this webinar knows this, is we look at the same trend lines, the same fib levels, the same RSI. We don't do anything fancy because this business is tough enough as it is. You guys tend to overcomplicate things. I think most traders do, and that usually is a result because you want to make more money, so you want to use different indicators because different indicators are going to give you different results, and it's going to make you more money. No, that's not the case. When you find a system that works for you, especially a simple system, you can just the way you become more productive in the markets is your position sizing has nothing to do with oh, if I throw on a MACD, it's going to make my life so much easier, and I'm going to make so much more money when I use this MACD, or if I use this Ichimoku cloud or whatever. I have a very simple process that I follow, and the good news is that anybody who joins this webinar on a daily basis knows what they're going to get here. It's going to be the same charts, the same boring analysis every single day. And boring is good in the markets, and a lot of people will try to convince you otherwise that their system's better, or their complicated system because it's more complicated, it's going to make you more money. That's not it. I mean, I don't even have a system. It's just doing the same basic analysis every day. keeps it easy, keeps it simple. The old kiss system, and that's it. All right. So let's, if you take a longer term viewpoint of the euro dollar, I'm still bearish. Now, the reason why I'm still bearish is because we're below this yellow trend line. As long as we stay below 112, or now it's maybe 112 and change, I'm still bearish, and there's no reason to be no reason to be bullish here. I mean, yes, you can be bullish inside this range if you want to go, well, I'm trading the range, so I just want to be on the long side near term. You can do that. I think that being bullish right now, I think being bullish in longer term, like I'm going to buy the euro now at 110.50, and I'm looking for a move to 116. I think it's a little foolish right now, because we're below this major trend line. As long as we stay below this yellow line, I think the bearish camp is still, or the bearish argument is still valid. All right, now we have been in a range, and I don't know if we are. I don't know personally right now if this range is ready to break, but I'll tell you that I think we're approaching some pretty key support here, anywhere from where we're at right now. For those of you that are some risk takers, and you're like, well, I want to get long the euro, and I'm looking for something to do. Well, fine, buy the euro dollar, put your stops below here. You can risk 20 pips right now and get long, and look for a move back up to like 111 and a quarter. So you're risking 20 pips to make 70. It's not a bad risk reward to be on the long side right now. It's not something that I'm going to do, and you guys know I trade when I see stuff like yesterday. Oh, and by the way, yesterday I was short the U.S. dollar, Japanese yen. I was short the New Zealand yen, and I was short the euro yen. I made money in the euro yen, New Zealand yen, and I closed out the dollar yen for like a 10 pip loss. But I mean, and if you were here yesterday, you know, I trade if I see them. If I see them and it's something I want to do, then I'm going to do it immediately. I don't think twice about it. Excuse me. Sorry, I didn't mean to yawn. It is it's 4:35 in the morning here. Yeah, it's early where I live. So if I yawn from time to time, you understand the reasons why. Anyway, yeah, this is not necessarily my cup of tea to buy the euro right now. What I'd rather do is see a rally back over to like 111.50 and get short. You know, personally, if we see a rally like this today in the euro, that's what I'd rather do. I'd rather be on the short side up here. But you know, for those of you that are like, well, I don't want to be short the euro. I think the dollar's going to hell in a handbasket. Well, fine. If that's how you feel and that's the way you want to trade, so be it. But you know, then you probably want to take a shot at it pretty soon. I think key support is going to be at 110. I think resistance is going to be up here at 111.50, and I'd rather be on the short side of it personally. But again, if you guys want to do a little counter trend trading, we have 110, 110.50. Our both support levels. Whoops, 110.40. I'm sorry. Yeah. We're really just on support right now. And then I think resistance is 111.50, 112, okay? You know, 111.50 right here, and maybe up to 112 if we can make it all the way up there. Or actually I should probably write down 111.80. So okay. I still have a bearish bias in the cable. Whoops, or in the euro. Bearish. Okay, so let's go over to the pound. Now, I am long the pound. I'm long a small position in the pound. I'm down 38 pips right now. Okay, I'm sitting on the long side of the pound. Why? Because I'm playing the big inverted head and shoulder pattern. Okay, and I started buying it yesterday. I bought it last night at 132.10. I bought a little bit more at 131.80, and so I have a like a half-size position right now long the cable. Will I be wrong, or will I be right? I don't know. Will I be wrong? I don't know. I think that if you get below, in my opinion, if you get below this 130.50, that this is going to not be an inverted head and shoulder pattern. I think it's going to be a continuation pattern. But you can see I have the boxes, which would represent the length of time it takes to develop a shoulder here, especially if you're talking symmetry. So you've got the cable, which the 618 retracement comes in at 130.50. Ultimately, I think that's really key support. Below 130.50, and I know I'm wrong, but support in the near term will be right here at 131. Okay, so I'm going to write down support at 131. Now, for those of you that are looking at the pound saying, "Hey, Blake, that's a head and shoulder pattern." It is a head and shoulder pattern. There's a head, there's a shoulder, there's a shoulder. It's also in a downtrend. Okay, we don't look for head and shoulder patterns in downtrends because they are not continuation patterns. They are reversal patterns. Okay, so a lot of people get sucked into these trades, and I'm not saying it won't work out. I'm just saying that over time, if you look for head and shoulder patterns as continuation patterns, you're going to probably find out that you lose money, and you're going to go, whoa, why am I always kind of finding these head and shoulder patterns? I keep losing money on them. Well, it's probably because you're looking at them as continuation patterns and not reversal patterns. Okay, so that's the reason why I'm on the lookout for this big inverted head and shoulder pattern, because I think this is after the Brexit fall, this will be a recovery trade. Okay. I think there's a strong likelihood that the pound continues to rally. Remember, the Bank of England did not cut rates. They left rates unchanged. People speculate that they're still going to cut in August, but you're speculating at that point in time. At this point in time, how about if they don't? Then you're really screwed. On top of that, the UK inflation data came out much stronger than expected last night. So, with that being said, I think we have a lot of support here, 131. Now, resistance intraday, though, intraday resistance is going to be right here. Okay, it's going to be at 133. Here, let's let's, I'm going to clean this up a little bit. Okay. All right. So if you take a look at, actually, if you take a look at this, you know, if for some reason the pound just starts to rip out of, um, you know, for no reason, it may, rip up to 133 and get stalled up here once we challenge the underside of this trend line. Here's the thing. You and I may have different viewpoints about the pound. I'm on the long side. I think there's a shot that we can break above 135 and then and recover up towards 140. I think there's a potential for that. The flip side to that is the dollar looks really strong. When I say the dollar looks really strong, I'm talking about the dollar index in general. The dollar index in general looks angry. It looks like it wants to rally. Now, the one thing that you have to pay attention to is if the dollar index really starts to rally, that will prohibit the pound from rallying more than likely. Okay, and I think about that. I'm not necessarily comfortable being short the dollar at the moment. I'm a dollar bull, not a dollar bear. However, I'm playing the dollar to the short side right now. All right. So there's a little contradiction going on in my analysis and the way I feel and what's happening. So that's why I'm not extremely bullish. Also, you might be on the other side of the cable because you're like, listen, the UK is going to follow through with a Brexit. The pound's going to 125 eventually, or maybe even a 110, and I want to be on the short side. Okay, I see that argument. I don't necessarily disagree with you. I think that any move up towards the 140 level or maybe even the high 130s may produce another move back down. Because I think over time the pound's still going to continue to weaken. But near term, what are we going to, near term, when I say near term, over the next day, next couple of days, next week, it's very choppy around here, so just be careful getting too directional and getting too aggressive with either longs or shorts. All right, anyway, I think 133 is going to offer resistance today. I think it would be really hard pressed to get above 133. I do still think we're in a bearish trend, and while we're below 135, it is bearish. So I'm long. The bias is bearish. I'm very and keenly aware that I'm trading counter trend. Is it okay to trade counter trend? Sure, as long as you know you're trading counter trend. If you know you're trading counter trend, you'd better be, not aggressive. And I know that if I was trading, a full-size position long the cable right now, I'd probably be pooping my pants. I'd probably have to go strap on some Depends underwear so I could just poop it in my seat. And that's, not the case. I don't want to be aggressively long the pound right down here. Not knowingly trading counter trend. All right. So anyway, Forex Analytics actually just tweeted very similar chart. This is right here. Forex Analytics just tweeted this chart. Is it a breakout or is it a continuation? It's the question that we ask. Okay, let's go over to the Swissy. The Swissy. Here comes the Swissy. You see? Okay, here's the Swissy. Now the Swissy is challenging resistance right now, 98.50. We talked about 98.50 yesterday. Bam, here we are hitting it right now. Now the big resistance comes up at 99, so we all know that. 99, oops, 0.9900. That is the big resistance. That's the big kahuna. That is the, the big one, because we had this, Gartley pattern, and if we break above 99 cents, it's going to be a big, big, massive breakout, in my opinion. Okay, but we pulled back to the 618, double bottom there, and we've held. Okay, we've held the 618. So support for today, I think we can tighten it up a little bit. I don't think we have to write that down. I don't think we have to write down 97.60 again. This is going to be support for today for bulls. It's be right here. 98.10. I think near-term bulls don't want to see that break. We are in a range. Okay, we are in a range. A big freaking range in the Swissy, you can see. But, you know, get above 99 cents and this thing's going to turn bullish. Okay. Let's go over to the dollar yen. So here's the dollar yen. I was short yesterday. I shorted it at my cost average was 106.05. I ended up, or I'm sorry, 105.95. I ended up getting out at 106.05. I lost like 10 pips in it yesterday. We rallied a little bit higher than I thought we were going to. So let me ask you guys this: what was the resistance? What was the resistance we wrote down yesterday for the dollar yen? What was the resistance? $106.30, right? When we were here, we wrote down 106.30. We went to the high point in Asian trade last night was 106.32. I have to say, that was pretty freaking good, right? Okay. Now, this high right here is 106.80. The 618 retracement of this move, high to low, is 106.70. Channel resistance also comes into play right around this 106.80, 90, depends on how you draw it. I mean, you know, my drawings may be off. You know, it's just because I draw channels a certain way doesn't mean the market's looking at it that way. The market may be a little tweaked one way or the other. But listen, I'm going to tell you right now, if we get up to 106.70 in the dollar yen, I'm going to short it. One of the things I pride myself on here on the Morning Edge, for those of you that are relatively new to listening, look, I tell you what I'm going to do before I do it. Now, there are obviously situations that occur because I'm only on the webinar with you guys 3.5 hours a day. I'm here for 2 hours right now. I come back at noon Eastern. 3 hours after I'm done, I spend another hour and a half with you guys. It's free. We don't charge you. Hell, I don't even pitch you. I don't even, tell you, hey, you should be a Wise Trade member or anything like that. I just do analysis. One of the things that I pride myself on is that I'll tell you what I'm going to do before I do it. Now, like I said, it's not always the case. I mean, we sometimes have situations where the market will move and, things develop and I'm not on a webinar with you and, I'd end up taking a position. That's normal and that happens. But if I'm around and we get up to 106.70 and I see it, there's a good chance I'm going to be taking a short there later today. Okay. Now, it doesn't mean we're going to get there either. We could very easily not get there. Now, I want to bring up a chart pattern that Ron in our chat room, Ron, who he is a sailor, he saw, and I want to bring this to your attention because I wasn't looking at it. He is looking at the dollar yen as maybe being an ascending wedge, and it could very easily be an ascending wedge, which I love ascending wedges. Ascending wedges are like my ascending and descending wedges are my favorite chart patterns. I love them because they tend to be very strong reversal patterns. And what you might notice here is, see how we're moving higher in price? Notice how relative strength is not. Do you see that? Here, I'm gonna actually tweet this chart. This is what all the people that are not listening to the webinar, this is what they're missing. So let me go ahead and just tweet this chart because I think it's a very, very very good chart. Let's see, 7. What's today's 19th? What 2016? Yeah. Okay. Okay. U.S. dollar, Japanese yen as it approaches the major 106.60 to 80 resistance has divergent RSI in ascending wedge at tip. Yes. Let me add that chart. It's a good chart. I mean, like I said, I'm gonna be excited to short not only the dollar yen too. I would short like um, other yen pairs too. You know, Aussie yen, New Zealand yen, Canadian yen, crap like that. So I'm just hoping we get up here. We get up here, and I'm gonna short the hell out of it. You know, it's really, I think it's a good look. Okay. So anyway, we're making our way up there right now, and it's something that I think we should pay pretty close attention to. Wow, the euro is coming under pressure. The euro is actually nearing support. Look at the euro. Pound's coming down too. So here's the euro breaking lower towards 110. Where's the pound? Pound's coming into support too. 131 is going to be really key here. I am gonna actually think about buying some euro. I might buy some euro New Zealand again. Uh-huh. Sorry guys, let me just take a look here. We're gonna have to pause our normal broadcasting so I can think about buying this damn thing. 52, 65, 25. I don't think we have to risk a whole lot, right? I spot a little bit of Euro New Zealand. Let me take a look at the Euro Aussie. Uh, I mean, if you think this thing's going to break out soon, 147, we've been as high as 147.60. I think I'm going to have to buy a little bit of Euro Aussie too. Okay. I just got small positions on, really small right now, because obviously in the Euro Aussie I want to add on a breakout above here. Euro New Zealand, same type of thing. I'd rather just buy a little bit here, and if we can clear the 38% retracement, then I'll buy more. So I bought a little bit of Euro Aussie and Euro New Zealand again. Don't mind owning those down here. Okay, let's go back to, what the hell was I talking about? Where were we at? We were at the dollar yen. Oh, yeah. Dollar yen. So going back to the dollar yen. So where's support? So support right now, it would be, I think, probably right around here. Anybody who's bullish, I mean, if we break through, well, that's so far away. I say 105 and a quarter. That's not really. I think really it's right here, 105.65. And you know, this is the 105. You guys know how big this 105.50 area is on a weekly basis and monthly basis. It's huge, right? Right here, right here, right here, right here. So right now we don't want to see it break back below 105.65, right? 105.65. 105.65. Well, maybe we do. I mean, it depends. If you're bullish, you don't want to see that happen. We are in a range for now. For now. All right. Damn, I'm taking a long time doing this analysis. All right, when I get back, we're gonna have to get really fast with the Canadian, Kiwi, Aussie, dollar index, peso, Nordic currencies. I'll be back in a few minutes. Don't go anywhere. Thanks everybody for being here. Be right back. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I got to get cruising through this analysis. So let's go over to the dollar Canadian. All right, so the dollar Canadian, we're still in our here. Let's get rid of all this crap because you can see we're in the apex of this triangle, this wedge, this whatever you want to call it. It's a pennant. We're right in the middle of it. Let's get rid of this here. Okay, so. As it tightens up, it's getting very choppy, and these moves aren't making sense because you might go, well, damn, Blake, crude oil's up, crude just bounced. Why is the dollar Canadian bouncing? Look, correlations are not going to matter much when you're in the apex of a triangle. They just don't. Correlations, you can just pretty much throw them out the door because, the market's just getting whipped around. This is the definition of I'm getting my ass handed to me right now, is trying to trade inside of this. So I'm going to tell you, when we break above 131 or we break below 128 and a quarter, that's when we're going to see a massive move. So 128.25, 131, and my opinion is you stand aside. And I'm not trading that Canadian until we break out. There's going to be so much money to be made. There's going to be so much money to be made when you break here or you break here, right? Right now, you're just going to get your ass kicked. It's think about the correlations. Look, crude is spiking right now. The dollar Canadian should be crapping the bed, and it is not, and that is probably going to hurt a lot of people. With the trying to trade those correlations, they're just getting killed here. All right. Anyway, so there's the dollar Canadian. All right. Let's go over to the Kiwi. There's the Kiwi. Now we have dairy auction results that come out later today. Now the thing about the Kiwi dollar, this is a very bearish event. What's happening right now is extremely bearish. We have this channel here. Let me remove that. I'm going to get rid of this. I'm going to grab this and I'm going to put it over here. I'm going to put it over here, and we'll deal with that in here in just a minute. But, okay, we have this channel that we've had drawn out for, God, I don't know, months, right? That's probably a pretty good description. I think we've had this channel drawn out here for maybe the last month and a half or so. Okay. See this trend line? See how we cleared it? See how we're back below it? That's not good. If you're bullish, you're going, oh crap. That's not good. Now we have the dairy auction results that are coming out today. Now, for right now, this is what I'm going to call the sell zone. I'm trying to grab this damn thing and move it over. Right over here is going to be around the sell zone. That's where if you get an opportunity to get short the Kiwi, 75-ish, 70, 75 should be good resistance. And for those of you that want to short it, probably not a bad place to short it. I think we're, we were trading sideways and in a range. I still think we're in a range, but I think what we're doing is we're making a bullish break to go to the lower end of this range, to make our way down here to 67 cents. We're at 70. I think we're going to be, trending lower here for a while. But we got to figure out where support is. So support's going to be right down here, 69.70. Okay. All right. Let's take a look at the Aussie. RBA minutes last night, or the RBA minutes last night really left the door open for more rate cuts. Where I told you the risk yesterday. Yesterday we said, hey, the risk is the RBA minutes are not going to be as neutral as the market was expecting. The market was expecting a very wait and see RBA. The RBA minutes suggested that the RBA will move rates based on data, which caught a lot of people off guard. A lot of people were thinking, no, the RBA is going to be in wait and see mode. You know, data could go up and down, and the RBA is going to really just kind of let it sink into the economy. I warned you guys yesterday of the risks of a dovish RBA meeting minutes, and that's what we got. You know, obviously the Aussie sold off as a result. I was short the Aussie, took profits. I took profits after the RBA on this move. I closed mine at 75.20. I was short from 76.05 from last week, from right here. I closed my position out last night. Now, there should be some support here. And the warning has been false breakout to the upside. False breakout leads to a breakdown. We got that breakdown. We're at a 50% retracement right now. That means that really key support is going to be at this trend line, which will be at the 618. That comes in at, let's call it 74.50. That's major support, 74.50. And if I put an asterisk next to a price, that means it's major. It's a major, you know, support or resistance. That's going to be major support. All right. What the hell is going on with crude oil? Look at this crude, man. Look at crude. Look at crude just ripping. Wow, we came right off that trend line support. Look at that. But bam. Damn. If I was a crude trader, I'd be considering shorting into this rally. Maybe not yet, but you know what I'm saying? Know what I'm saying? Maybe move up to like 46. I'd probably be looking to short into a move in the, you know, as we approach 46 bucks. That's just me personally. And I don't trade crude, but I'm just saying for those of you that do. All right, let's go back to what we're at. Aussie. Oh, we're finishing up the Aussie. Okay. So where is resistance? So resistance now, you have to think about all the traders that are along the Aussie that are like, oh crap, I can't believe I'm holding this. You know, I can't believe I'm holding this crap. And they're thinking, I can't believe I'm long. So now I'm just looking for exits. So any move up to 75.35, I think you're going to be looking for, you're going to find some sellers up there. Okay? All right. We are in a range coming down to trend line support here. So, you know what? I should probably put the Kiwi in a range. As bearish as I am the Kiwi dollar, I think I'm a perma Kiwi bear. I still think we're in a range. All right, let's go into the dollar index. Okay, so here's the dollar index, and yeah, the dollar index is seeing a bullish breakout here. Remember our wedge? Yeah, it's breaking out. Okay, so now we got to figure out where resistance is here. So resistance 97.07, so I'll write down 97.10. 97.10, that's resistance for the dollar index. Support, it would be a 96.80 because that was the breakout point, right? That's the breakout point. Is now turned bullish. Peso, let's go over to the peso. Oops, wrong direction. Oh crap. Hey, can you guys hold, just hold for me for like one minute? Sorry, I gotta My animals are needing in. Excuse me 1 second. Just give me like 30 seconds. All right, guys and gals, sorry about that. All right, so we did the dollar index. Let's go over to the peso. So here's your peso. All right. Longer term view of the peso is right here. A lot of people are trying to trade this as a head and shoulder pattern, but I'm not in that camp. I believe that if the market sees a little bit of risk aversion, we're going to go right back up towards this 1950, maybe even higher. So, but I don't know if there's a whole lot to do with the peso right now. You know what I mean? Like, I mean, 1860 is going to be resistance. That's easy, right? 18.6000. And then support. I mean, I'll write down support right here. Okay. I'm going to write down support right there. Hold on really quick. Stand by. One second, I'm just checking something out real quick. Okay. Support's going to be right here at 1835, fee, FIFO, FUM, 35, 1035. I don't know if what to do with the pair right at this moment. All right, let's go over to the Norwegian krona. So here's the, my headset's all jacked up. I just ran over the cord. Oh, there it is. Okay. All right, so here's the Norwegian krona. Norwegian krona is trying to make a break for it. Now, if we break above 848, that's going to be huge. Okay, it's going to be a huge breakout. Now, remember, the dollar index is trying to make a break for it. So it's 848.50, 8.4850. That would be a big resistance. Support right now, because if you're bullish the Norwegian krona, what you don't want to see is you don't want to see a move back below here, which is 843, because that would be a failed breakout, right? 8.43800. And we are trying to make a bullish break. It's attempting. Coming out of that trend line right here. It's, you know what, I don't even want to mark it down yet. We break above this resistance, and then it'll be bullish. Swedish krona. And now the Swedish krona, very similar story to the Norwegian krona. Look at how big this resistance is. That's huge, right? So 861.50, roughly. 8.6150. And then support. Same thing here with Swedish krona. You don't want to see a break below this 854. Because if you break through this support in the Swedish krona, that support with the Norwegian krona, then you got failed breakouts, right, or failed rally attempts. So we're still in a range environment, but we're threatening to turn bullish in these, threatening to. Okay. All right. There's your bias chart. It is finished. We are done. So go ahead and take your pictures, grab it, copy it, whatever you got to do. I'm going to take some questions. So, and for those of you that are newer to the Morning Edge, I take questions as of now.